Hey, it's Paul Olbrantz, Clear to Close Brokers. We're going to go over four things in this video. Number one, three things that you need to know when interest rates start to rise like they have since this past week. Number two, we're going to talk about briefly what happened and what's causing this chaos. Three, I'm going to give you an actual example. And four, for some of you tech nerds out there, or bond nerds, I should call us, like me, stay until the very end. We're going to go through the charts and kind of explain what's going on in this market and really how severe it is. It's been quite a wild ride here. And at the very end, I'm going to give you guys a gift that if you guys get in a contract between now and the next Wednesday, weekend in rates the next couple of days, we're going to make this as easy and soft for you as possible. So stay tuned on that. So first, let's talk about the three things that you need to know when rates go up, especially if you're looking to buy a house. Number one, this is very important. Your pre-approval could be impacted, right? So remember, you're not really pre-approved to a purchase price. Rather, you're pre-approved to a monthly payment. So as interest rates rise, so does your monthly payment. That's going to put a downward pressure on your max pre-approval. Now, that may not even be a max pre-approval issue for you. Maybe you're approved for much more, but you have a family budget limitation that you don't want to exceed. So before, or if you're going to look at houses this weekend, please reach out. Let's make sure that the payment's still in line with your goals, your pre-approval, etc. We don't like surprises. I know you don't either. Number two, as interest rates start to rise, more people become fearful. They sit on the sidelines and they're not out there looking at homes, which means to you is you're going to be in a better negotiating power. Now you can probably ask for a lower purchase price. Personally, I would ask for my closing costs being paid. If you want to know why, I'd be happy to walk you through that. It makes financial sense to have your costs paid. It's money in your pocket. Third thing, which rarely people look at, as rates go up, it actually offsets part of that increase in monthly payment by your actual tax savings. If you haven't watched my video on tax savings, this is real money. This is money that you get in your pocket. And so these are things that you just don't want to skimp over because it's real. So what does that mean? What I'm going to do now is before I bring up the charts, let's talk about what happened since last Friday to this moment. Last Friday, we left the office skipping. Everyone went out looking for houses with possibly the lowest rates we've had in a very long time. Come Monday, things dramatically changed. And what happened was there was a rumor at 10 o'clock in the morning that the tariffs were going to be lifted or 90 days or lifted for 90 days, except for China, which prompted a lot of activity, especially in the stock market. I think it was the S&P 500 gained something like $3 trillion in wealth. It was huge. It was massive. At 10:30, the White House came out and said, no, that's not true. That's not what we're doing. And that $3 trillion, that lost $2.5 trillion. Now, the magnitude and how that affects interest rates is you have to remember interest rates are traded on the bond market. So it's a safe haven. It's like treasuries. What happens is when you see such a dramatic loss like that, stocks come due. Their margin calls, they come due. So people have to come up with money right away to pay that fee. So where are they getting that money? They're getting it from selling their treasuries and their bonds. So we saw a mass exodus of funds from the bond market, which really put in upward pressure on interest rates. Now what we're seeing over the last couple of days is a lot of uncertainty. People aren't putting their money in the stock market nor bonds, but coincidentally, gold and cash, but gold has gone up 3%, which is a really big increase in gold. So maybe that's where people are parking their money for the time being, waiting to see what happens with all this craziness. So as we start moving into there are a couple reports that are coming out tomorrow and Friday and next week. We just want to be very mindful that the rates can be volatile, and that's what I'm here for. If you have any questions, reach out and let's run some numbers. Let's make sure there's no unexpected surprises. So let me show you exactly how interest rates impacted. Let's say if you were buying a house at $1 million, putting 20% down. Check this out real quick. All right, let me bring it up here. So if you were to buy a house on Friday at $1 million, the rate was 6.375. Your principal and interest payments about $49.90. Well, today that same scenario is going to give you a rate of a 6.99. That's going to give you a payment of $53.17. That's essentially increasing your monthly payment by $326. Now, I do want you to notice at a 6.375, your monthly tax benefit's $956. We're at 6.99, it's at $1,048. So it's about $100 in increased savings with taxes. So it's not really $326, it's more like $226. These are real numbers that you need to take into consideration. So yeah, I like to pay less, but when you break it down, it's not as extreme as people think. All right, as promised, for you bond guys out there, let's take a look at the charts here. So let me bring that up real quick. So if you take a look here for people that have not looked at how this works, essentially as a bond price moves up, interest rates go down. So you can see here that last week was a really good week in interest rates. In fact, we really thought we were going to start seeing a lot of great momentum heading into this week with interest rates. Instead, what we walked into is probably one of the most dramatic losses we've seen in interest rates. I mean, in one day, it went from 102 all the way down to 101. That's almost an 80 to 90 point difference. Let me give you an example of how much that means. That means 6.375 in the morning, 6.625 in the evening. That's pretty dramatic. All right, let's bring it back up. And unfortunately, it kept going down. Now, today we got very nervous as we hit down to 100.24. And you can see that it's slowly crouched up. And now we're in this little channel here. So this is important. These channels are, there's a high, which is a Fibonacci level, which is, what is that? That is the 3-day moving average, right? And then you have another little Fibonacci level down here. And these are the areas of support. So it takes momentum to break either through or below this. So as long as we close up here, I'm confident that we're going to trade in here. So we might see some stability. The problem is if we break above or below that, there is a long ways for interest rates to continue to move up. So you want to hang in there. Always ask questions if you have it. Now, here's the gift. If you hung with me this long, from now till this weekend in interest rates, where I'm going to have another giveaway. The thing is, if you get in a contract between now and then, we're going to heavily discount our interest rates. We want to make sure that you don't feel all this burden. We're going to we have a pricing special that's coming out. If you have more questions on that, it's huge. It's going to be really significant. It's going to help you save a lot of money, even though it's not going to feel that way because that's 6.375. Now we're going to give you like maybe a 6.625 versus a 7%. So I got your back. Let me know if you have any questions. Paul Olbrantz, Clear to Close Brokers. Take care.